Welcome to the FFS podcast for Finance's Sake, the show that challenges the status quo of accountancy and business. We're here to break down barriers, remove the gatekeeping and freely share the kind of practical advice and insider knowledge that most people keep behind closed doors. Each episode, we ask the uncomfortable questions that others shy away from, whether we're interviewing CFOs from major companies or tackling the everyday tax and business issues facing SMEs. No jargon, no fluff, just honest, insightful conversations to help you make smarter business decisions.
Welcome to the For Finance's Sake podcast. My name is Paul Rouse and I'm today with Rachael Harrison from Chadwick Accountants. Today we're tackling a topic that makes business owners sweat more than a surprise HMRC envelope, VAT. Whether you're new in business or just about to hit the 90,000 threshold, this episode is for you. Let's demystify the beast. VAT are three letters that generate as much fear and confusion as VAR. Nobody knows what VAR is for. What is VAT for and why is it there?
Well, it's there essentially so the government can take more money off us, to be honest. It stands for value added tax. And basically, businesses collect that tax on behalf of the government when they sell their goods or services. And they pay it into the pot that then looks after us all, supposedly.
So if you're a new business or you've been in business for a while and you think you're hitting the threshold, what exactly is that magic number?
So that magic number is £90,000 at the moment, and that is £90,000 over the last 12 months. And it's a rolling 12 months, so you can't just take your financial year end or the tax year end. It's within the last 12 months, and the minute that you have hit it, you have to register. It is so important that you do. Once you've hit it, so when we're recording this, it's actually the 21st of May. So if you'd hit that today, you would have to put your application in and you would be registered from the 1st of July. So it's the first of second month after that you have to be registered, and there you have to start charging VAT on top of all your services or goods.
A phrase that comes around a lot is the flat rate scheme. Again, what exactly is that in plain English?
Well, the flat rate scheme is a scheme of VAT, so most people are on what we call the standard rate scheme. And on a standard rate scheme, you charge VAT on your goods or services, and then you reclaim VAT on anything that you purchase. On a flat rate scheme, you don't reclaim on your purchases, but you get to pay a lesser rate of VAT. And that rate really does depend on what industry you're in. And if you just type into Google flat rate scheme percentages, it will come up on the top page, and you can have a look at your industry and see what you have to pay in VAT. So what this essentially means is, whereas if you charged £100 for something and you added VAT and it was £120, under the standard rate scheme, £20 of that would go to the VAT man minus any cost to that. But on the flat rate scheme, you'll pay a percentage of the £120. So if you had a 10% scheme, you would be paying £12 in VAT, and it goes on the whole of the amount, not the net amount. I do strongly advise you ask someone with a mathematical brain, or ideally an accountant, to do that check for you. And it's something we regularly do with our clients when they're getting close to the VAT threshold, or new clients that come across and look at it and say, would you be better off on the flat rate scheme? So we have a look at that and see if it's worth them moving. Because actually, sometimes you can make money out of the flat rate scheme. Other times you're better off on the standard scheme. I mean, generally speaking, if your expenses are low, you'll be better off. If your expenses are higher, you would be better on the standard scheme. So it really is about running those figures and checking out. But one of the great things about that scheme is that it's designed for simplicity. So then you don't have to find all your VAT receipts because you're not claiming anything. So if you're a bit of a scatterbrain, it might be good for you. But you can only register if your turnover threshold is under 150,000. So if you are turning over more than that, you're not eligible to register.
But if you're a scatterbrain, that's also why you need a good accountant.
Probably,
yeah.
Yes.
You mentioned different industries. Does it vary from sector to sector?
Yes, it does. It varies widely. So if you're a membership organisation, you can pay 8%. But if you're in accountancy, it's 14.5%. So it really does vary on the industry. And that's because HMRC have looked at it and decided what the average is in your sector of the amount of expenses you would normally claim. they do actually give you a 1% discount during your first year, which is nice.
Wow.
It's not,
They're
not
generous.
it's not very often we get anything from them, is it? So,
So what are the biggest VAT mistakes you've seen clients make in the past?
well, not registering on time is an absolute classic. It happens all the time, especially with new clients that walk through the doors and I'm like, I think I might have crossed the threshold, and we're like, yeah, you did. So that's not good. But also reclaiming VAT on things they shouldn't. Well, it's a regular thing when we're doing VAT that we're scrolling through the standard things that people try and reclaim VAT on that they can't. Entertaining clients is a classic as well. Business lunches that happen on a Saturday or Sunday, with children's meals in them. That's quite suspicious.
Do you spell these out to clients
We
in
do.
advance when you take them on?
We do. And then they often end up having that conversation of, what was this transaction here? Really, was it on a Sunday? I'm not so sure. We also see people trying to claim legal fees of divorce quite commonly. It's not a genuine business expense, therefore it's not going to be included in your accounts, nor is it on your VAT return.
So there are very strict rules as to what you can and can't
There are.
claim. Yeah.
And
And
even
there's very few grey areas, or no grey areas.
there aren't any grey areas, no. And like I say, if you're not sure, you really should seek professional help. You don't want to get it wrong.
Yeah. A lot of people are confused by jargon and technical terms that they're maybe not familiar with. We have zero rated, we have exempt, we have outside the scope. Again, in plain English, what do they mean to the average business?
That's a really good question, Paul. To be fair, zero rated and exempt is another common mistake that people make, because a zero rated item needs to appear on your VAT return, where something that's outside the scope doesn't need to appear on your VAT return, and people are often categorising them the wrong way, so it can make their purchases look abnormally large when they're not. So, zero rated is when the VAT is charged at the 0%. You can still reclaim VAT on your purchases if you were providing zero rated goods. Exempt VAT means there's no VAT charge and there's no reclaiming any input VAT. Things like insurance fall into that category. And then we have outside the scope. This is the stuff that should not appear on your VAT return at all. We see it all the time again. It's like paying your salaries. They don't appear on your VAT return. There should be no VAT. They don't need to be there. And it's just about knowing the software that you're using and which category feeds into the VAT return and which doesn't.
So VAT traps. If you're a growing business, what is one that a lot of businesses just don't see coming?
To be honest, more and more we're seeing international sales in this day and age. Digital products are really popular. People selling, online courses and things they've created themselves. And often they'll sign up with a company like Stripe to take the payments. And Stripe's quite clever, and it will just send you a message and say, you've sold too much in this country without being VAT registered in that country. We will refuse any more sales until you sort it out, basically, which is great. But then you need to really say hello to the one-stop shop scheme. And we won't go into that because it's quite complex, but please do reach out for professional advice if you are planning on selling internationally, because you won't sell very much before they come a knocking.
Partial exemption, again, that's another phrase that pops up. It sounds like a get-out-of-jail card, but what really is it?
God, I hate partial exemption VAT. It's an absolute bedbug of mine. I spent a couple of years doing partial exemption VAT in industry. So basically, it's when your business sells both VATable and exempt goods and services. So what it means is that the HMRC don't say, you can reclaim all your VAT. They say, you need to look at your purchases and decide what relates to the VATable sales and what relates to the exempt sales, because you can't claim VAT against the ones that relate to the exempt sales, but you can for the ones that involve the 20%. And what that means is a massive headache for your accountant, because the average Joe is just not going to be able to do that. And it's not much fun for the average accountant either.
As a business, should you ever voluntarily register for VAT if you think you're coming close to the threshold, or do you wait until you hit it?
That's a really good question, actually. And some businesses, we actually advise to register for VAT well before they get to the threshold. Obviously, every business is different, and you should definitely take advice from a professional. However, there are several reasons you may want to register for VAT early. One of those could be that it's about being perceived as a larger business. If you're doing business-to-business sales, they often expect you to be VAT registered, and if you're not, that can be a bit of a problem. But otherwise, it might be beneficial to reclaim VAT. Again, if you're business-to-business, who you're selling to isn't going to care that you're charging VAT. It's not going to affect your price. So why not reclaim VAT on the purchases that you're incurring?
Makes sense. It makes sense. So you've registered for VAT. What do you do the day after? Because obviously everything changes from being pre-VAT to post-VAT. So what do you need to do as a business?
Well, get all your books up to date to the day before, and then activate the VAT on your software. That's so important, and so many people get it wrong and they have VAT
Is that
before
fairly
the
easy
date.
to do? Is that?
It is if you've got the number, if you've got your VAT number.
So it's all programmed into...
It's all programmed
system,
into
right.
every system going, and they'll all have a start date on there. So you need to make sure that that is basically ticked on in whichever software that you're using, and then you start accounting for VAT on everything. So before that, you won't have accounted for any VAT. If you bought something, for £1.20, it would have gone in as £1.20. Now it'll go in for £1 plus 20p VAT, and it's about making sure that all your income and your costs go in with the correct VAT
And it's
treatment.
down to the actual day of purchase.
It is down to the day of purchase. Now,
receipt,
you can reclaim VAT prior to registration. Again, speak to a professional about what you can and can't. We're more than happy to guide you through that. But it's another conversation.
There must be some horror stories out there, people who don't take VAT seriously and have paid the price for it.
Oh, there's good two ends of that. Number one, we've had several clients walk through these doors who've come across, and they've just been handling their own affairs up till now, and they say, "I think I might have passed the VAT threshold. Can you help me?" And we go, "Okay," and then you look at it and go, "Yeah, you passed it a year ago." And then they have to back register for VAT. We have to do all that back work, and they're left with a huge bill, often unexpected, because when you're gearing up for VAT registration, you will look at your prices, especially if you're business to consumer. And every time I have seen this, it has been business to consumer businesses. Think local cafes, flower shops, those sorts of retail businesses are key that keep falling into this trap. And then you have a huge bill to pay. Nobody wants a huge bill to pay. And then the other side of it is if you don't submit on time or you don't pay on time. Now, when clients are really struggling to make ends meet, we'll often have a conversation about what to prioritise. And, corporation tax, secret, it can wait. Like they don't chase you to the end of the, they charge you a bit of interest.
So the fines on that are less than they are on other.
Yeah, but
misdemeanors.
VAT, they set the dogs on you. It's not that long before the bailiffs come a knocking. So I always say pay the VAT. Plus the fines on it are horrendous. I mean, up to double what you owe. It's not good at all. So, horror stories would be when people that haven't paid their VAT. And to be fair, we've had a specific client that had a very good reason for not submitting on time. Very good. Was hospitalised. Sent off all the hospital notes. They wouldn't take it back. It's like, where's the reasonableness in this? And of course, we're going to go to tribunal and see where that goes, because I don't think that's very fair. But it feels like almost a robot is deciding whether or not you can have the fine returned.
And is then the VAT a separate branch of HMRC? Is it peopled by different species?
I think all of HMRC is peopled by different species, and neither of the species speak to each other. I don't think they speak the same language.
You're constantly giving advice, obviously, to people. What are some of the advice you give that people don't listen to?
So when people are first registered for VAT, we go through with them what they can, what they can't claim. And one thing that people don't seem to know is when you do your first VAT return, I suspect there is somebody actually looking at it, because first VAT returns...
A human.
Yes, not a robot. First VAT returns have an unprecedented amount of inquiries, especially if there's a refund. So they will actually look at every transaction. So it's so important that first one is really squeaky clean. You don't want to be putting through those lunches with the in-laws, do you? And it seems like they sort of forget the rules over time and they try and push the boundaries a little bit more. At the end of the day, it comes down to, can you sleep at night with that or not?
So you're saying in the early days they're relatively lenient, or the opposite? Do they crack down on the new people because they're more prone to making mistakes?
They do crack down on the new people. I don't know why. Maybe it's the fear that they're going to put in quarter after quarter of reclaim. But it can be quite common with a business that's newly registered for VAT to have a reclaim because, some of these are voluntarily registering so they can get their VAT back as they set up over sort of 6 to 9 months. And then HMRC gets the money as they make their sales going forwards.
And if you do then get into trouble, how serious is it? Is it a slap on the wrists? Nobody expects the Spanish Inquisition, but is it as bad as that if you make mistakes, genuine or otherwise?
Well, they do look at it as to whether they feel it's genuine or not. I mean, if you deliberately make mistakes and it's serious enough, you can look at prison time, so it is serious.
And they can tell genuine mistakes from fraud?
As much as me or you can. At the end of the day, that's for a court to decide, isn't it? And whether HMRC...
A genuine mistake could be, putting the decimal point in the wrong place, or, typing something wrong.
Exactly. There's a difference between, lack of due care and attention to deliberately creating invoices that don't exist. I mean, that's obviously going to be fraud, isn't it? So at the end of the day, it's going to be a human that decides where it is. Often if you end up in trouble, they ask you to come forward and tell them what you think the penalty should be. And they'll give you a range, and it'll be, careless but not deliberate, or was it careless and deliberate, or was it,
All the more reason to use a professional.
Exactly. Let the accountant take the blame for it.
Yeah. Or just not make mistakes.
Ideally not make the mistakes
place.
at all.
Yeah.
Agreed.
So can you appeal against a penalty or a judgment? Or is that it?
You can appeal.
Yeah.
As I mentioned earlier, we've got one that we appealed and that was denied. We had another one that we appealed and was denied, went to tribunal, and they dropped it before we got to tribunal. So I'll take that as a win. But I do advise that you do try and appeal, but don't get to the stage where you need to, because I really get the impression it's just a computer looking at it and it's like an automatic no. I don't know what you have to tick to have a human look at it, but it feels like it's a process set up just to see who will really go further, because once we appealed the decision to tribunal, then a human looked at it, then a human was in touch with me and asking for information. And
which brings us back to VAR.
Yeah, exactly.
We've come full circle.
Yeah, so just imagine, just think, if you're going to appeal, it's going to be a long process, and obviously the best advice is don't get to the point where you have to appeal.
Yeah, brilliant. It's been a pleasure. I'm all for demystifying beasts, especially when it's something as potentially confusing as VAT.
Thank you, Paul, for coming on the FFS podcast for finance's sake. It's been a pleasure talking to you and, as you put it, demystifying the beast for our listeners. And thank you, listeners, for tuning in. If you would like to hear more free business advice, please press that subscribe button to our free podcast or follow us on LinkedIn.